Sometimes I do enjoy looking at the bar charts. Okay. There is no difference between the candles and the bars, other than the fact that the bars are not something sexy to look at. They're not appealing to the eye, but candlesticks are, right? They're a little bit easier to look at, and you probably won't get a headache, but you might get a headache looking at bars all day long, right? Because there's no colors and stuff like that. But nonetheless, they give you the exact same information, okay? So we're going to go back to the basics for a second because it's very important that you have an understanding of the open, high, low, close. All right. And no, I will not be doing Bitcoin. Crypto is not something that I have any interest in. That's really for Zach and Jordan. If you want to tune into their sessions or recording, you're more than welcome to do that. I recommend it. But personally, I just don't look at Bitcoin. All right. So it is what it is. All right, so let's look at a hypothetical candlestick. All right, and let's see if we can do that. And then we're going to have a wick on the top. And then, of course, we need a wick on the bottom. Okay, so everybody should know exactly what is on the screen. Okay, despite the fact that it's green, obviously it's an up close candle. Okay, so there's 4 things, right, that we need to be paying attention to: the open, the low, the high, and the close, right? So we're talking about the open, the low, high, and the close. Okay, and this, again, this is for a up close candle. It's going to be opposite if we're looking for a down candle, right? This would be the open, this would be the high, this would be the low, and then this would be the close. Okay, now why is this important? Because if you're going to anticipate the next candlestick, let's say monthly, weekly, or daily. Now you can get into 4-hour and 1-hour, but looking at the open, high, low, close is really important on the higher time frames. Okay, so when we and I actually got a message the other day because someone had messaged me and said that they took a lot of interest in what it is that I had said on one of the streams as far as looking to buy below the open on the daily or the weekly time frame. So this is why I wanted to go over that a little bit. Okay, so we're going to take some of this off now. So just give me a second while I delete this. Okay, so let's assume that this is a daily candlestick. All right, it could be a Wednesday or Thursday, who cares? Okay, so the opening price is on this hypothetical candle is $25.96. Okay, let me just put that right there real quick. So $25.96, okay, is our hypothetical opening price. So in a environment where we feel the market should go higher, right, for whatever reason, there could have been a divergence, there could be a whole number, there could be a whole realm of possibilities. Okay, but let's just assume that we're already in that stage where we're assuming that this day is going to be bullish. All right, we want to note the opening price, which for this hypothetical is $25.96. So in a bullish environment, we want to look to buy. I keep losing my favorites. We want to buy $25.96 or below. Okay, that's where we want to be looking to buy, below the daily open. Now, again, this does work on the weekly and the monthly as well. All right. So if we're bullish on the monthly, we want to buy below the monthly open. Or if it's Sunday and we had a gap down, right, we want to be looking to buy below the open of the weekly candlestick in anticipation that that week is going to be bullish. Now, if that week is bearish, your trade is not going to go the way that you anticipated, right? Because you got it wrong. But nonetheless, in bullish environments, okay, if you're taking notes, which I hope all of you are, but I know some of you don't, okay? So yes, that's an attack, all right? Um, if you are taking notes, that's the most important part, okay, is buying below the daily open. And again, if we're looking for a bearish candlestick, we would want to look to short above the daily open or the weekly open or the monthly open, okay? Is this technique for a swing trader? This technique is for whatever you want. It could be a day trade, swing trade. It could be a long-term trade, whatever you want, okay? Depending on which time frame, of course. If you're doing this on a 1 hour time frame, obviously that's probably going to be a scalp or an intraday trade, okay? In a bullish environment, you want to buy below the opening price, whether it's the daily, weekly, or monthly, okay? So how do we use that? Well, we would have to find an environment. Let's actually take this off now. We have to find an environment where we believe the next day is going to be bullish. All right. So let me actually go to a 1 hour really quick. And I want to explain the trade that I was looking at the other night. And it was, hold on. It was right here. All right, so let me throw up the session breaks so you can kind of see what it is that I'm talking about on the smaller time frames. Oh, that was the wrong way. There we go. Okay, so looking at the 25th, all right? This, again, this is a hypothetical candle because we're looking at this day. Okay, so what you would do is you would take the opening price, which I believe is right here. Okay, and you can extend that out for the rest of the day. And now this is where things get a little bit tricky. So you can go and on TradingView, you can actually write this out. You could say opening price, right? You could put that like on the top right, maybe extend it over a little bit, and that will kind of help you be organized, if you will. I guess it would a little bit organization, right? So if you're anticipating that whatever this day is, June 25th, right? If you're anticipating that this is going to be a bullish day, right? You want to note the opening price. And TradingView also has another tool, and I think Siva used this the other day for the price label. If you want to as well, boom, you can slap up that as well. So for whatever reason, on this day, the opening price was 30.44, right? So we want to let that be known, and we want to buy below that somewhere. Okay. So now where would that somewhere be? We have to use other smart money concepts like time and price and things like imbalances, institutional candles, and stuff like that. Okay. But it starts with basically anticipating what that day is going to be. All right. So with this setup in here, this is what I had anticipated. All right. And some of my private students kind of already know what I'm going to talk about. So it might be a little bit of a repeat for them, but it is what it is. All right. So basically, if we note the London Open. Okay. The London Open for me is at 2 a.m. Central. Okay. So the London opening price is right about here. It's off a little bit. It's about right there. Okay. So London opens and we rally lower, right? We took previous day's low, I believe. Yeah. This was the previous day low from the 24th. So the 25th made a lower low. However, price was able to, I guess, for those of you who like the break of structure, right? Here's your break of structure because you had some highs that got broken here, right? So if we have a break of structure, you can anticipate that smart money is now in the move, right? Let me actually put that up here because this is how I look at it personally. This is what's going through my mind. I don't always put this on my charts, but I want to walk you through it. So if I'm holding your hand, I gotta hold your hand, right? So I'll just put this on here. Smart money is now in the move, and that's way too big. So we'll put that right here, and we'll just put a little arrow here. Okay, smart money is now in the move. So where would we be looking to take an entry? Now, when I posted or when I took my screenshot of the before, my anticipation was actually 30.25. So I'll go ahead and mark that up for you here. 30.25 is about right here. Now, I was wrong as far as like precision. You know, obviously it hit that and it did trade down to 30.12. You know, so yeah, I did, you know, I was not perfect on that. But nonetheless, because I picked 30.25 because it's a 25 level and it's also inside of this imbalance. Because remember, when smart money gets in the move, sometimes they leave imbalances, right? And so when the market comes back down to fill in those imbalances, right, we're also below the opening price. Ding, 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 right? We're below our opening price. We're in a area that smart money, smart money's in the move, and we're anticipating that rebalancing of price. And this is obviously well below a 50% or a 618 fib. We don't have to put that up on here. You guys can already see that by now, right? Low, high, retracement. Now, did it come all the way down to the 786 or that's probably 886? Yeah, it came down there, right? But boom, market rallied higher, right? So now here's another thing as well, not just the London Open, right? Now you have to understand the New York Open. So the New York Open is, for me, is at 8:30. Okay, so on this black down candlestick right here, that is the New York Open. So New York Open basically does the same exact thing. Here's your opening price. Okay, so what do? New York opens, they drop it lower. They take out a short-term low. And then the market was able to rally higher, right? Now, how did we anticipate that that was going to be a bullish day? Well, number one, that's kind of just from experience, but to put a little bit more of a reasoning, I guess, other than that, if you haven't seen it already, right? If we're going to go long, we need a target, right? So what's our target? Some of you probably already saw this already. Equal highs, right? That is a very short-term, easy target. And my target for my idea was actually at 30.60. So mine was a little bit conservative because it did push past my entry and obviously pushed past my original take profit. So again, this was not the most sexiest trade, you know, that I've taken. But nonetheless, you know, it's still experience. So I'll walk you through it really quickly one more time. We anticipated that this would be a bullish day. All right. We bought well below our opening price, and we were able to, price at least was able to go to the original take profit, which was above the opening price, right? Buy low, sell high, right? That's what everyone on the internet says, buy low, sell high, but they don't put specifics on it. This is specific. Time of day, London Open, New York Open. Specifics, opening price, we want to buy below that somewhere below opening price, right? Do we have a target? Yes, we do. equal highs liquidity. So there was a lot going on here. But having a, let's take everything off now. Having a naked chart and just looking at this, it's not very, most traders would look at this and they will not understand what's going on. They don't understand what in the world is happening here. But I just walked you through all of it. And there's probably a little bit more going on as well. I mean, this is only a 15-minute. Inside of this, there was actually a 5-minute imbalance as well, which helped determine my reasoning for this to be rebalanced. But yeah, so there you have it. Now with Friday, of course, with Friday, of course, I honestly thought it was going to be a bullish day. I was obviously very wrong on that. But I wasn't in any futures trades, so whatever. It doesn't matter to me. Okay, if I'm not in a trade, I don't care what the market does. Even when I'm in a trade, sometimes I don't care regardless. But that was the reasoning for that. Okay, so let's actually go back out to the daily really quick. And I want you to understand that when you're buying below the opening price in bullish conditions, right? Look at this chart. Okay, I'm gonna get to the chat in just 1 second. I see you guys typing up. Look at all of the bullish days in here. Mainly this power leg here, right? It's surrounded by, or not surrounded by, but it's filled with a bunch of up candles, right? So what do you notice about most of the up candles? Let me, I don't even know what would be the right tool here to draw, but right. So what do you see right here on that day? What do you see on that day? On that day? On these 3 days right here? On that day right there? Right? Most of those days have what? Wicks to the downside, right? Or correction. Sure, we could call it a correction if you want, right? So in bullish conditions, you would have been looking to buy below that open. So now how can you study this? Well, this is what you do. Go and mark up this entire leg, okay? And then on an intraday basis, you need to go and study basically what's below the opening price. So like for me, what I would do is take a trend line, all right? And I would just basically, you know, look at the, look at the opening price and pretty much do that. All right, give me a second because it's going to take a minute. I know it's going to get a little messy, but, you know, it is what it is. All right, so let's just assume we're going to look at that in there. So now I'd go to a 15-minute. We're going to have to scroll back a little bit and then put on the session breaks, okay? And now we would study. We have to fix the lines a little bit. Right here. Have to bump this back a little bit right here. Have to bump this back. And bump this one back a little bit. Okay, so let's start from the beginning, right? You can tell what happened on this particular day. Well, price rallied, and then our 8:30 open was here. It drops down. What does it leave here though? Why did it drop down like that? Because the market gave us equal lows, right? Market came down in bullish conditions. This is our open. We would essentially be buying below the daily open, below the equal lows. You see how the market reacts beautifully. Okay. And I don't really see any other reasoning. I mean, there obviously is more reasons. There's probably an imbalance right here that it came to fill in. So that's smart money efficiency, right? Clear the stops here, rebalance price here, rally it higher. Okay, so there's one example. In this example here, probably not a lot going on, rather a consolidation day, and even at the end, it kind of just didn't really do much. So maybe we didn't do anything here, or maybe we took a loss here. All right, no big deal. Rather large correction, right? Here's equal highs right here near the opening price. Price came down for whatever reason. I don't know. I'm not going to go through all of it. This is just kind of like speed walking you through this. Here's 3K. So that could be a retest of 3,000. We bounced it here, and then we took stop losses there, rallied above the opening price to equal highs liquidity, and to also this imbalance up here for some rebalancing. All right, moving forward. And that was probably a Friday as well. Yeah, it was. So this was Sunday opening, and I believe this was a trade that I took on the 1st. I don't remember, but nonetheless. Okay, Sunday gapped. Price came back almost to the gap fill. It didn't fill here. Came back below the opening price. By below the open in bullish conditions, market rallies. Same thing here. Market opens, trades lower, rallies, actually trades lower again below the opening price, rallies again. All right. So that's the quick and dirty version. All right. Obviously, it gets a lot more into detail because we didn't really do a whole lot on time and price, or even get off of the 15-minute. But basically, I'm kind of showing you the price reaction around buying below the open in bullish conditions. Okay. So let me scroll back just a little bit. Talking about the first daily candle of the week. No, this goes for any day, for any of the days. Now, obviously, I'm not going to be looking to trade on a Sunday or a Friday. If it were me and I was doing my studies, I would only look at Tuesday, Wednesday, and Thursday. So I would avoid Monday and I would avoid Friday. And I would just go and look at every single Tuesday, Wednesday, Thursday. What's the overall conditions? And then boom, mark up the opens. Now, here's another thing too. And I didn't want to plan on doing too much because of information overload. But this not only works for the daily open, but it works as well for the session opens as well. So when we're talking about the London Open and New York Open, I did give you one example, the trade that I showed you, where let's actually go back to that really quick. That was right here. I mean, actually, you know what? I might have that preset. Let me take a look real quick. So here's our 830. Let me see if I have that actually. I do. Boom. New York opening price. Okay. So if we're bullish, New York opens, drops lower, we want to buy somewhere. Okay. Even if you miss the initial move below and market made a higher high here and it came back, you guys can draw fibs, can't you? Fib retracement, 50%, 618. Boom. Market rallies. And then there you go. So yes, it works for the daily, and it's redefined a little bit more when you get into the specifics of London and New York. Now, don't get confused and just throw on London Open, New York Open on every single chart, because you remember different currencies trade at different times. You know what I'm saying? And then the indices are a little bit more different at the New York Open than they are with London. So be aware of what you're trading and what asset basically when the most volume occurs, and then match it to that session. Okay, so don't just throw it on every single one. It's not that cookie cutter. Okay, you have to use time and price to what's applicable on the asset that you're trading. Okay, I hope that makes sense.